Hello folks, welcome back. Back in the saddle again. Now it's been a little bit of a wait for an upload and update from good old ICT, but I'm human and sometimes my body just doesn't want to do what it's asked to do. And I've been battling back spasms and migraines, so I've not been feeling well. So I have not been able to start the new ends series that I'm going to have on this YouTube channel. So Lord willing, I'll be working on it this week. The first episode, if I can get it all sorted out and outlined as I want it. I don't know how many episodes it'll be, so don't ask that because I don't know. But the first episode should be, if everything goes well, this Friday at 10 p.m. Eastern Time. And I think we'll go like once every week. So a Friday night upload for that particular series. All right, so I've been out of the loop for a little while. When I'm away from the marketplace, I get detached, and it takes a few days for me to get back in sync with things, work out sentiment, work out the kinks in my own analysis, and push away any kind of preconceived ideas that I would want to see in price, kind of wrestled that out. And how do I do that? I go through demo trades. Okay, I go in and I work with the demo account to get myself acclimated to the current market conditions. That way, when I'm doing things incorrectly, it doesn't harm me, it doesn't hurt me, it doesn't take anything out of my account, it doesn't cost me money, but it does give me the ability to hopefully get in sync. And then what happens is, when I feel acclimated to the present market conditions, then I'll go in and trade with the smallest leverage with a live account for 1 or 2 trades, just to get a feel for being back in the marketplace and not more or less chase profits. So I get that asked a lot, and there's your answer. So we're going to be working our way bottom up from the E-mini S&P today. I know some of you watched me do some work in this in the morning session, and I'll cover a little bit of that here. All right, so we're looking at a 5-minute chart, and what I was watching is the lows here, and even the low over here, and a small little gap right in here. I watched it drop down at 8:30. We consolidated at 9:30. We had equities opening, and then we dropped down in. So if you look at the down close candle here, so this down close candle and then this one dropping down into it to touch it, I was utilizing that as my mode of entry. So I was looking at kind of like a stacking effect with down close candles or my order block. And I wanted to see it go over this imbalance, which it did once, and then I wanted to see it expand and go through. It struggled with it. So in the recording, in the link you'll see in the description below this video, it'll take you to Twitter, and it's a short little vignette showing me executing the entry and then changing my mind, realizing I'm offside. That means I'm wrong. That means I'm not on the right side of the marketplace, and it doesn't necessarily mean I go reversing whatever trade I was in all the time. But because I'm trying to get back in sync with the marketplace, I want to be in the market continuously. Now, let me make sure you understand what I just said, because I'm not stating that you, as my students, should be going long, short, constantly in the marketplace. No. But for me, it allows me to get a feel for price action. It allows me to get in sync with price action. It gets me closer to price versus just sitting down in front of the charts and saying, okay, well, this is what I think might happen. Whereas if I'm engaging and I'm thinking about what it's doing while I'm in a pseudo trade, because today was a demo trade, I'm trying to seek more insight, a closer feel for what price is doing, because being away from it for a week or more, it keeps me from feeling confident with my own analysis. So that's the human side of me that, like you and everyone else, I wrestle with that. So I have to fix that and overcome it. The only way I know how to do it, and that's how I do it. I ease back into it using demo. Then once I get comfortable with where I am with present market conditions, where I think the market's going to likely draw to. Then I'll ease back into live trading. So anyway, I was looking for the market to want to run back above this imbalance and then attack the buy side. And I was going to take a partial off on the 12 contracts I had long, and then reach for the objectives I hinted at as my interest for buy side, which was the July 8th and June 27th and 28th relative equal highs for buy side liquidity. And we'll see those in a couple minutes when we get into the video. But when we got to this point here and struggled, right on this candle here, I was thinking to myself, okay, I'm wrong. Let me close it. And it didn't stop me out. I didn't take a loss, quote unquote. Again, I couldn't take a loss anyway because it's demo. But the idea was I was exiting the trade so that way I could reverse, because I started looking at the relative equal lows here, and I wanted to be taking 5 contracts off below that. And then you watched me do another partial and another partial, and then finally getting stopped out at the stop that I had lowered down during the management of the reversal and short. Then it went sideways leading up to lunch, New York lunch. Then it fell out of bed during lunch hour. And then in the afternoon session, I just watched. I didn't really participate. I didn't do anything. While I felt it could potentially go a little bit lower, to take out the low of the day set overnight, I was not expecting all of this drop. So each time it created this, what I was doing is I was watching and observing, does it respect price going to these levels? The imbalance here hits it, and it's order block. Does it sell off? Yes. We created a fair value gap. Last 2 up close candles, that's your bearish order block. Does it go up into that and hit that and sell off? Yes, it does. So when price is doing that, and I don't want to be in the marketplace, I don't trust my own analysis because I'm right back in the saddle today. So I'm not trying to get out here and flex. I'm not trying to prove to myself that, old man still got it. It's I'm easing back in because I've been away from charts. I've been away from price. I don't feel connected. So I'm watching price book like this. So it's allowing me to see price being delivered real time. I'm watching it. I'm seeing, does it react the way I teach my students, you all, to support the idea that order flow is bullish or bearish. And obviously it just kept sinking today, and I was impressed to see how far it went. And I would be doing you a terrible disservice if I sat here and said, oh yeah, I knew it was going to go down that far, because I didn't. Okay, I didn't know, I didn't expect it would drop that far. And obviously I went into the day with the expectation that it would try to run for July 8th's high, and I was wrong. But you watched me navigate and reverse and get back in sync with what it was at least trying to do in the short term, which wasn't very much, admittedly, during the morning session. But then all the fireworks happened during the lunch hour and then rolled right on down into the low of the day. 15-minute time frame. Here is that imbalance also I was watching. So I was looking for the willingness to want to drive higher, clear the buy side here. Partials would have been taken there. A partial would have been taken there. And then I would have tried to keep at least one contract long just to see if I could get this for the weekly range. Wasn't in the cards. It is what it is. I was wrong. No problem. No skin off my back. I don't feel embarrassed. I don't feel like my methods don't work. I don't feel like my models are failing. It's just me, the operator, the trader, that is rusty at the moment because I have not been engaging price. So anyway, while I did not see this as a setup for entering a short, I wanted to see it overcome that, understanding that it failed to rally and go above this high. It should have took off. If I'm right, if I'm on side, it should have vaulted above here to run for the buy side. It wasn't doing that. It was not doing that. So around 31 seconds or so into the video link that you see in the description, you'll see me change gears and collapse the trade and then go short. Now, the opening gap for the week is here. So I'm extending that through time all today. And that is where I thought, at best case scenario, that it would gravitate to that. anything below that is additional that I was not expecting. So just below the low here, I was mentioning the early lows overnight. If it went lower, it should go there, take the sell side, and then if it accelerates through that, well, here's the opening gap, which I've taught you recently. So it went to that, yes, and just kept on rolling, and we have an imbalance down here. So we have now a low, so that might be something to watch. I'm interested in that level as well. On the hourly chart, okay, here is the hourly imbalance. Again, that was the fair value gap I was looking for as it dropped down in. I wanted to see it trade above, partial here, next partial here, and then relative equal highs. Okay, so here's the June 27th, 28th, 2022 highs. And here's the high I mentioned. This is the two levels I was referring to in Twitter to study going forward. Now, they might be useful going forward the rest of this week, or they may not even be considered at all and may continuously just break lower and go back into this imbalance down here. I don't know that yet. Like I said, this is my first day back in the charts. I'm getting a feel for it. Right now, I feel like the first day where I knew my model, but I'm just out there using it for the first time. So if I can personify the feelings I have when I'm away from the marketplace, it feels like that. I know how to trade. I know what I'm looking for, but you still have to consider where you're at in the marketplace. Now, some of you might be thinking, well, why would you want to be buying here when you're all the way up to close to this high from down here? Well, it's shown exceedingly strong intentions to go higher. My private group knew about this. We went to that at the opening on Sunday, and then it filled the gap, and then it rallied. So in my mind, I'm thinking there really isn't anything over here that's needed to fill in. So the liquidity above this high makes the most sense to me. So that's why I wasn't worried about. And if I'm wrong, I'm wrong. It's not, it's not a make it or break it thing. And this is why I teach you the way I teach you, that being wrong or doing it wrong incorrectly, that shouldn't be feared, because you're never going to obtain perfection. That's not going to happen. I can't do it. So if I can't do it, and I'm teaching you the concepts, I authored these things, and I can't reach perfection, why would you expect to be able to do so? That's unreasonable and unrealistic. So anyway, while in the afternoon I was expecting the likelihood of coming a little bit lower, a little bit is what I was expecting. This was a little more, much more actually, than I was expecting on the downside for today. So it's done a whole lot of movement lower. And to me, we have buy side here, and buy side here. Between this low and this high, we are in a short-term discount, but there's nothing in here that makes any sense to go long off of. So I'm basically waiting for more information. We'll see how it trades overnight going into New York tomorrow. And then obviously I'll share with you on Twitter where my focal points are for liquidity, and basically kind of like tip my hand to you where I think bias is. So that's how I teach, I point, and then my students study going forward. So let's continue on the daily chart here. This range is where we're at, and we've taken sell side here, and we've taken sell side here. We have not taken buy side here or here. So to me, again, that's why I'm leaning on those levels that I shared, which is the July 8th and June 27th, 28th, respectively. Okay, because those levels have not been traded to. Now, I could be completely wrong. It doesn't need to go up there. In that case, I would be wrong. If it continuously goes sideways or goes lower, whatever, I'm wrong. But it makes sense to me to want to eventually try to gravitate to those levels, because we've already done sell side here. We did a pass through on this low for sell side there. And while we did have a nice return back here, we failed to go higher here. And today we couldn't get above here. Now that might be indicative of the beginning of a sell-off going into the rest of the week. I don't know that, folks. I don't know. So I'm trying to be transparent and honest with you as an educator, because there are times I simply don't know. It may be a barrier internally that I'm wrestling with, that I'm seeing something that I think might be a factor, and I override the rules sometimes that I have that might not be the best decision. That's where I do it as the operator incorrectly, and I'll do it wrong that way. But sometimes that'll happen, and my experience will be rewarded, and I do that with quotes in the air, with me trusting my experience and then not adhering to my specific rules about a specific element of price that may or may not be something that you've learned from me that might deliver a result that I would find favorable. So it's a matter of personal experience. And sometimes that might be a good thing, and other times it may not be a good thing. So you can't really appreciate that, especially if you're a new student or a new trader, because there are times when you'll see something that isn't inside the model that you're actually working with at the moment, but you'll engage price because you've been here before. You've done this before, and it's familiar to you. And you know what you're trying to get. You're not trying to get a home run. You're not trying to get a whole lot of movement. You're just trying to get something to take it out and pay yourself. And that's kind of like what I did today. I had it wrong initially in the beginning of the day, and I compensated, closed the trade, reversed, and took what made sense to me. And you can see the results of that. But I'll talk a little bit about this trading range in a moment. The last time we talked about gold, I don't know exactly what day that is, but I'm quite certain that I did talk about it, and you all know that we were looking for this here. So you all know I was calling the dollar higher, and that's going to allow weakness on gold because they're inversely related. Okay, so there is a correlation between gold going lower, that means dollar going higher, vice versa. This market, let me preface it by saying that it is a event-driven market. It's highly manipulated. It's absolutely manipulated all the time, which means that you have to really consider it only when it's obvious to mess with it. And most times I'm not feeling confident trading it. Otherwise, I'd be in here doing all kinds of things with it. I'm not. So I mentioned how I felt the dollar's going to go higher, gun to my head. That means that we're going to aim for the sell side here. And then here, we've done that. Okay, so I didn't give you both sides of the marketplace. I told you, gun to my head, this is where I think it's going to go. We did that. Now, this is the remaining sell side liquidity pool. So because that has not been traded to, I feel that it could go down there. That means that dollar could still have a little bit more room on the upside. So just keep that in your back pocket. Just know that that's kind of like what I'm considering, but not necessarily pushing you into a trade idea. You just observe it and see what happens. I could be wrong. And finally, the bond market. Oh my goodness. It's been such a long time since ICT talked about the bond market. Even in my private group, we haven't been touching on this market. But the reason why the S&P market is consolidating right now is because you're seeing the same consolidation going on in the bond market. Interest rates are consolidating. And until this range gives way, either above or below, that's noted here, index futures are going to be choppy. Okay, they're going to be in very, very small, tight ranges, and not tight ranges in terms of intraday, but in terms of the daily ranges. They'll be not trending where they're having like a movement like this. Okay, nice big runs. We're in this range here. So while interest rates are holding the market in a strangle or like a headlock, just be mindful that you have to be a very short-term trader. And the things that I would normally do with a trending market, I'm not implementing right now because of this factor right here. Okay, if you go back and study how the bond market was when it was trending and when it was allowed to move a lot, that's when index futures was moving a lot. Okay, try not to think too much about their agreement or inverse relationships of direction. I'm speaking specifically on the tone of the market being in trending or consolidation. Okay, so right now we're in consolidation. So in consolidation markets, you got to be thinking ultra nimble intraday trading, not short-term trading, not get in, hold it for a couple of days, none of that kind of stuff. There will be moves that take place like that, but I don't trade like that when it's like this. This environment is a session day trade scalp. Okay, that means I'm looking for a specific run in price, either in the AM session or PM session. I'm looking for one good setup. I'm not trying to go in there with multiple, orders to pyramid anything. I'm looking for one good setup, get the bag and run. Okay, that's all I'm trying to do. If I get one trade that's profitable, I'm not going to go back in the afternoon. period. Okay. I'm treating myself like a kid in a candy store. You know, if I let myself go nuts, I'm going to do a whole lot of things that might not be the best thing for me. When I have a trending market, I can go insane and run equity up real quick and build it, pyramid and all that. But in here, I can't do that and feel confident about it because it's choppy. We're in the summer months. Okay, so we're in the doldrums of the summer, and everything that's going on, and I'm not going to list all those things that's going on. You just know what's going on based on the headlines. All those things can create a run real quick because of an unexpected event. And just put some thought behind it, and you'll know what I mean by that. All those things keep me wanting to be very nimble. Okay, 5-minute or 1-minute chart setups only, not 15 hourly or daily candle for the daily range. I'm not interested in those things. Okay, which is why I was not able to see or expect the big down day that took place during the lunch hour in New York down into the close of today. So that's the reason why I was unable to see it, because my models switched me from trending to highly specific short-term little entries and getting in, getting out, surgical strikes. And I'm aware that there are going to be days where I will miss days that have runs, where it just keeps on going. I'm okay with that because they're not always going to fulfill or be in alignment with what I'm trying to do. Or let me rephrase it by saying, I will not always be in alignment with that. So as a trader, I'm not in that mindset that will allow myself to hold for a full daily range. Especially if my bias, as I was indicating this morning, that I wanted to see the buy side run too. But because it wasn't doing that, I changed what? I changed directions, and I also changed my style. It's going against what I expected. So therefore, I want to get out and be nimble because I might be wrong again. So I want to get below the sell side liquidity and take my profits. Aggressive, take partials, partials again, partials, and then stop was, put in position where if it ran me out, I don't care. It wasn't going to take anything from the demo equity. Okay. So again, it's not trying to produce the idea or promote the idea in you as my student that you have to be in all the time. If you're not profitable going long, that means go short. No, 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 don't do that. Don't do that. Okay, that's not what I was trying to convey today. I just saw something that made sense going the opposite direction, and there it is. So you can see how I can get it wrong, but even in instances where I'm wrong, if I understand what I'm done wrong, I can reverse and work with that information. And I'll leave it up to you whether it was something worthwhile. But I did not see the afternoon unfolding the way it did. Okay, so that way we are aware that I'm not claiming that. I didn't claim that. I didn't say it in advance. And I'm 100% transparent with you. I did not expect that much of a cascading in price. So that's okay. I'll get more probably throughout the week, and I'll take my pound of flesh before Friday. I'm certain of it. But until I talk to you next time, be safe.